Section 5B doesn't have anything besides examples, and there are quite a few of them. But the reason that there's not really any kind of general version of this is how you solve this sort of problem is because, well, for the discount ones, they vary so much from one to the other that there isn't really a consistent format. It's so context based that it's really tough to try to write one. I did try to write one and I thought it looked more confusing than what it was worth. And I figured it would just make more sense to start doing some of these. And maybe the general idea is just like the way that you lay things out and kind of go step by step. And without specific examples, that's kind of hard to see. Right? I mean, I guess you could make a general one where there are no numbers or anything, but it would look awfully abstract. And then the ones with income tax, I tried to write out a general version of that, but that also looked like it was more confusing than helpful. So I figured just maybe getting a look at a few of these, that might be the best way to get the hang of it, I think. And I think usually when you see this sort of thing, like in an accounting class, that's basically what it looks like. Is you get the ledgers out or whatever, and then you do a few of them, and then you kind of have the hang of it, and then you can do it when you have different cutoff points and different rates and things like that. So, all right, let's see. This first one, where it says that a gas station sells 20-ounce sodas for $1.99 each, but a customer who purchases two at once receives a discount of 75 cents. And then after the discount is applied, then if there is one, right, if they buy two, then a 7% sales tax is added. If they only buy one, then a 7% sales tax is just added to that one, right? So if a customer purchases two 20-ounce sodas, what would be the total price with the discount applied and then sales tax? Okay. So first of all, if let's say they buy two, first things first, even before the discount, would be what the sticker price is. So the sticker price for two of them would be $1.99 times two, right? If they're $1.99 each, when you have two of them, right? That makes sense. So that's $3.98 when you multiply that out, right? Then there's the discount. So we'll say minus the discount. So if we subtract the 75 cents, we're going to have $3.98 minus 0.75 for the 75 cents, which will give us $3.23. Okay. Then we have to figure out the sales tax on that, right? So the sales tax is applied after the discount. So now that's what we're going to need next would be the sales tax on $3.23. Then let's see. Well, it's 7% of $3.23, right? Since the 7% sales tax. So it's 7% of $3.23, which would be, if you convert this into decimal form so we can do the multiplication, 0.07 times 3.23, which if you round to the nearest cent, happens to work out to be 23 cents. So that is rounded, but I'll just put that in there, right? If you're going to round here, I think that's the conventional way to do it, to round to the nearest cent. Rounding, I guess, to the nearest tenth, like to the nearest 10 cents, seems really bizarre, and that would never happen. And then I think going farther, like rounding off to like 3 or 4 places, is probably too precise, right? We don't have coins that cover that, right? We only go down to the penny. We don't break that down any further. So might as well just stop there, I guess. And okay, fine. Well, now we can actually figure this out, because then the total price that the customer would actually pay. So you'd start with the sticker price, but then they get the discount, so minus the discount, but then plus the sales tax. Okay, well then we know what these things are. The sticker price is $3.98. The discount, we already know what that was. It was 0.75. So this first subtraction, we already know this is $3.23, right? And then we're going to add in 0.23, so 23 cents for the sales tax. So then you can say, well, this is 3.23 plus 0.23, which is 3.46. There. Oh, I guess the one other thing I think I should mention is just like with the order of operations, don't forget with something like this that when you do addition and subtraction, you do them simultaneously going left to right. It's really easy to forget that because the thing that you learn as sort of the mnemonic device, I guess, the PEMDAS, that makes it seem like the addition has to go first and it doesn't. And actually the multiplication doesn't go in front of the division either, right? You would do multiplication and division simultaneously going left to right wherever they show up. And then you do addition and subtraction simultaneously going left to right. So with this, you would actually do that subtraction first, and then after you did that, you would add the 0.23. So 346 is what we're going to end up with. All right. So that's what happens if you buy two of them at the same time. All right. Now, oh, look. 20-ounce soda right here, actually. So did I buy that with another one? Actually, yes, I did. Okay. So, I guess then part A is something that I've done recently. If I've got one of these sitting here and another one in the fridge. But then part B, what if instead of buying two at the same time, if you had two separate trips where you bought one at a time? That's going to be more expensive because you don't get the discount that way. But how much more expensive? It's not more expensive by 75 cents. It seems like it might be that. And that's involved, right? The amount of the discount is involved. But you also have to factor in the tax, right? Because the discount happens before the tax. So there are a couple of things that we could do, but I think maybe the best thing is, since we already know what the price is if you buy two at once, we can just figure out what it would be for one of them and then multiply by two, something like that. And that's what you would get without the discount. So with individual trips, there's no discount. So I guess I'll put that in first. So individual trips, no discount. Right? You got to buy two at a time to get the discount. So the total price for each soda you would have the $1.99, right? The sticker price. And actually, I'll put it in words first. It's just the sticker price plus the sales tax. So it's going to be the sticker price plus the sales tax. So that's going to be $1.99 for the sticker price for each one, right? So they were $1.99 each, and then plus 0.07 times $1.99, and so then what you would end up with, and I guess here I'm going to write it the other way just for fun, and I'm going to say if you factored out a $1.99, you'd be left with a 1 plus 0.07, because really adding in the sales tax of 7%, it's a 7% increase, right? So like with the last section, like how we had increases in there, you could look at it like that, and you could rewrite it this way, which then this would be 1.99 times 1.07, And what you end up with here is $213. All right. So then that means with 2 individual trips, you'd pay the $213 twice. Right? So then with 2 individual trips, you're going to pay the $213 the first time and the $213 the second time. So you'd have 2 times $213, which is $426. So then the difference between them, which would tell you how much cheaper it is, right? Because if you get the discount, you buy the 2 at a time, you pay $346. If you buy them separately, it's $426. So then the difference would be $426 minus $346, which is 80 cents. Right? So it's not 75 cents, right? Because even though 75 cents is the discount, you still have to factor in the tax, and that'll add in a little bit extra for what that difference will be. So you end up saving a slight little bit amount beyond 75 cents. All right. Let's see. The next one is another discount one. Because we've got people going out to eat using coupons, right? Those are discounts. So 2 people go out to eat at lunch, and one orders an $18 meal, uses a coupon for 15% off. The other one orders a $16 meal, uses a coupon for 10% off. Then after the coupons are applied, then there's sales tax. And then if they leave a tip of 8%, what percentage of the total bill is the tip, right? So then, right, you've got the like the rule of thumb of like leaving the 20% tip, right? We can see, are they leaving that? Are they leaving something bigger? Are they leaving something smaller? Right? We'll be able to figure this out. All right. So I think what we should do is just kind of do things in the order that they'd be applied. So the coupons get applied before the sales tax, and then the tip is kind of related to the total bill at the end. So we're not even going to worry about the tip for a while at all. First things first, discounts, right? That happens prior to the sales tax, so we got to do that first. So I guess I'll just say person number 1 and person number 2, where number 1 and number 2 are just the order that they show up in the wording. So number 1's getting the $18 meal, number 2's getting the $16 meal. I think that's what we're going to do. So you can have the person number 1 discounted price. So it would be $18 to start off with as the original price, but with 15% off. So minus 0.15 times 18. All right. Or we could write that as 0.85 times 18, which is 1530. All right. I tried writing in all the dollar signs, and I felt like I was squeezing them in. So I'll probably just write the dollar sign at the very end for these other ones. But then we have person number 2. Discounted price. And it's going to be the same sort of concept where, oh, right. I'm not going to do it that way this time. Start off with 16, but then there's 10% off. So minus 0.10 times 16. And I guess if I rewrite this one the same way, if you start with 100% and subtract off 10%, you're left with 90. So 0.9 times 16, which is going to be 1440. Okay. So then their bill before tax would be the 2 individual meal prices added together after the discounts have been applied. So the bill before tax, that's going to be 1530 plus 1440, which is 2970. Okay, so then with tax, because we know that there is a sales tax of 6%, it says that in the fourth sentence. So then I guess I'll write this as bill with tax. So they're going to have the 2970 plus 6% of 2970, which I guess to follow what we're doing up there, you could write this one as 1.06 times 2970, which is 3148. So when the check got dropped off at their table, that's what it's going to say. It's going to say 3148 because the discounts were applied to their meals. Then the sales tax was applied to that, right, to that amount. And so that's what's going to be on their bill. All right. So then we got to figure out the tip percentage, right? Because we want to see what percentage of 3148 is the $8. So then the tip percentage, well, let's see. So we know what the tip is. It's 8. We know the total bill is 3148. And if we're going to write this as a percent, not a proportion, then we're going to multiply by 100%. And what you end up with here is about 25.4%, round to the nearest tenth of a percent. So like if you put that into a calculator and you do 8 divided by 31.48 and then times 100, you get there. You get the 25.4%, right? So I guess fairly generous, right, compared to the usual rule of thumb, right? 25.4. That's a pretty decent size tip. Back when I was waiting tables, I would have been happy with that for sure. All right. Let's see. Now we're getting into the income tax. All right. So there are a bunch of these. There are more of these than there are of the discount ones, both in this handout / video and also in the homework assignment. And the way that the income tax ones tend to work is sometimes there are ones where there's just a flat tax, where it's this percent no matter what. And then there are ones where there's a progressive tax where it's like there's some threshold where below the threshold none of that's taxed, but then above the threshold that is taxed, things like that. And we actually see both of those in number 3. So it says that Ellie has an annual salary of $46,000, and with the current tax system, it's a flat tax. So she pays a flat rate of 15%, and that's what her income tax is going to be. However, the tax system is about to change, and the new tax system is that any income up to $8,000 is tax-free. Anything beyond that is taxed at 20%. So whatever the amount is above $8,000, that's going to be taxed at 20%. So with the new tax system, or the proposed new tax system, is Ellie going to pay more or less? That's what we got to figure out. So basically then what we've got to do is just figure out both. Figure out what she's paying under the current system with the flat tax, and then we'll figure out what she would pay with this proposed new system, and then we'll just see which one's bigger. I think that's the way to go here. So then the tax under the current system So this is the flat tax. All right, so this is going to be 15% of 46,000. So that's going to be 0.15 times 46,000, which is 6,900. Okay. So that's what it is now with the flat tax. So how about the proposed system? So the tax under the proposed system. All right, well here it's going to be broken up into two pieces because she makes over $8,000, right? 46,000 is bigger than 8,000. So there will be part of her income that's not taxed, right? Up to 8,000, but then everything beyond that is taxed at 20%. So really what you get here is you get 0% of the first 8,000 plus 20% of everything else, which I guess would be, I'm trying to put this into brackets, 46,000 minus 8,000. So the thing that I just put in brackets there, that's the amount above 8,000, right? It's the amount beyond that original 8,000. So we can say, all right, well then this will be 0 times 8,000 for that first part. So that's not really going to be anything, right? And then plus oops, that should be a 0.20, transposing digits. All right, 20%, that's 0.20 times 38,000. Right, the 38,000 is the amount of the 46 that's more than 8, right? It's everything else beyond that first 8. So 0 times 8,000 is just 0. And then 0.2 times 38,000 is 7,600. So that means the tax under the proposed system is 7,600. Okay, so then what we're looking at is we've got the current system, 6,900, proposed new system, 7,600. The 7,600 is certainly bigger. So effectively, that is going to be the final answer. She's going to pay more, right? So what we'd end up with is that Ellie will pay more tax under the proposed new system. Since 7,600 is bigger than 6,900. But this idea of with the proposed one where you have to break it into pieces and then you have the different tax rates. So like you have that initial 8,000 that's not taxed at all, and then everything else has a tax rate. That is a thing that comes up an awful lot in this section. So switch colors back and all right, here it is again. And 4 and 5 are really similar, but I wanted to get both of these in because it's a little bit different when they don't match up perfectly. So in 4 they do, and then in 5 they don't. So in 4 it says Dawson's salary is unknown. It's X dollars per year. And he currently pays a flat tax, 17%, but politicians have suggested changing the tax system to where it's a progressive tax, where income above 16,000 is taxed at 25%, but below 16,000 is tax-free. And it says that he's going to pay the same amount under both tax systems. That's a key thing, because since we know that, we're going to be able to set the two taxes equal to each other, and we can solve for what his salary is, and then from there we can figure out how much tax he's paying. So let's see, with the current system, he's paying 0.17 times X, right? Where X is his salary, right? It's just a flat tax. You take the salary, you multiply it by 0.17. But algebraically, you usually stick the constant out front, right? Writing it as X times 0.17 would make it harder to solve. And we're going to have to do that in a minute. So might as well set it up that way. All right, then the proposed system. All right, here what we've got is, let's see, it's going to be 0% of 16,000 plus 25% of everything above that, whatever that is. So, like how in the last one, if I scroll up for a second, how for that second part, we said, well, beyond 8,000, Ellie makes 38,000, right? Since 8 plus 38 is 46. So here, beyond 16, it must be x minus 16, since 16 plus x minus 16 is x. So the amount above 16,000 would be x minus 16,000. So that part's a little bit abstract, but that's what it would be, right? Since if you add x minus 16,000 to 16,000, you get x, his salary, back out, his unknown salary. So what we're going to end up with here is that then this is going to be 0. I guess I could write that as just 0 times 16,000, but it's a 0, right? And then plus 0.25 times x minus 16,000. All right, well then adding the 0 doesn't really do anything, so we could say, well then this is really just 0.25 times x minus 16,000. And then this, we could simplify it now, or we could simplify it in a minute. So I guess we'll just simplify it in a minute because this is so far over to the right on the page as it is. So we know that he pays the same amount with both systems. So same amount paid with both systems. Then what that tells us is that those two amounts of tax that we have written algebraically have to be equal to each other. So 0.17x would have to be equal to 0.25 times x minus 16,000. Okay, then we're going to solve this. So we got to distribute the 0.25 on the right side. So we have 0.17x equals 0.25 times x minus 0.25 times 16,000. But that's 1/4 of 16,000, which is 4,000. And then we're trying to solve this for x. So let's see, if you subtract 0.25x from both sides, you'd end up with negative 0.08x equals negative 4,000. Let's see. I was skittish because I didn't think I had enough room, but now I do. And it feels weird not to write in that step all the way. So minus 0.25x, and on the other side, minus 0.25x. All right, now negative 0.08x equals negative 4,000. And then if you divide both sides by negative 0.08, what you will end up with is that x is going to be $50,000. Right, negative 4,000 over negative 0.08 would be the same thing as 4,000 over 0.08 when you put it in your calculator. So that's what you get. That's not really the thing that we wanted as the answer. The thing that we want as the answer is the tax. So I guess I have to finish it over here. But then the tax, and you can use either one, right? Because they're going to work out to be the same. I'm going to pick the flat tax because that looks like it's less work. So then the tax is going to be 0.17x, which would be 0.17 times 50,000, which is 8,500. And if you sub in the 50,000 into the other tax, like the progressive tax, you'll also get 8,500. So either way should work. So that's it, right? What we ended up doing was we could write out the amount of tax in both systems algebraically, and because we knew that he was going to pay the same amount in both, we could set those equal to each other, solve for x, which is his income, and then from there we could figure out the tax on it. I picked the flat tax because I thought that was easier, but if you use the proposed progressive tax, you'd get the same answer. Okay, number 5 is like number 4, just with one little wrinkle in it. So like it says there, Harley's salary, again, is unknown. And then we have a current flat tax, and then we have a new system with a progressive tax. Below 12,000 is tax-free, above is taxed at a rate of 24%. And this time, Harley will be paying $900 more with the new system. So it's not that they're equal like in number 4. So because of that difference between the two tax systems, this ends up being set up slightly differently. And that's why I wanted to stick this one in here too. All right, so then with the current system, it's a flat tax at a rate of 15%. So that's going to be, and I've been writing in the zeros. So, oh, erase. There we go. That would be 0.15 times x. And then with the proposed system, it's the same kind of setup, right? Just with different numbers. It's going to be 0.24 times the amount above 12,000. So you'd end up with 0.24 times the quantity x minus 12,000. And I'm just jumping right to this because it's so similar to 4. Like this setup part is exactly the same, just with different numbers, right? Just with a different tax rate and I guess a different threshold for when the tax kicks in. But then the new thing here is that the $900 with the new system. So $900 more with the new system. What that means is that the proposed system tax minus the current system tax would have to be equal to 900. Right? I mean, if it's 900 more with the proposed one, that's how that would have to work out. But we know what these things are, right? The proposed system tax is 0.24 times x minus 12,000. And then the current system tax is 0.15x. And we can solve this, right? We have to distribute the 0.24 on the left, so we'll have 0.24x minus 0.24 times 12,000, which ends up being 2880. And then minus 0.15x equals 900. I guess we can combine terms. We got two x terms here. So 0.24 minus 0.15 is 0.09. So 0.09x minus 2880 equals 900. And then adding the 2880 to both sides to get the x term by itself, we're going to end up with 0.09x equals 3780. And then we've got to divide both sides by 0.09 to get the x by itself. I think I have enough room to at least get it to that. So let's see, 0.09x over 0.09 equals 3780 over 0.09. So then x, it's 3780 over 0.09, which happens to work out to be a nice number. It's $42,000. It's not obvious that that's going to divide well, but it does. And then we just need the tax under the current system, right? That's the thing that we were actually asked about at the very end. How much tax is she paying with the current system? All right. So using that, we want the tax under the current system. At least we got the easy tax, right? We got the flat rate one. So it'll be 0.15 times 42,000, which ends up being 6,300. And therefore, her tax with the proposed system must be 7,200, right? It would be 6,300 plus 900. So a little bit different because of that $900 difference. You don't just set the two equal to each other. It's easier just to put the two taxes, like the difference of the two taxes, on one side and the 900 on the other and solve it like that, I think. All right, then we have 6, which has a progressive tax but with more steps to it rather than just the 2 steps. Here we've got 5 steps. So Edward is a programmer making a gross salary of $60,000 a year, and he must pay Social Security, which is calculated as 6% of his gross salary, and then income tax, which is based on the gross pay prior to the Social Security deduction. And there is a progressive income tax, which has a bunch of steps to it. We don't necessarily need all of the steps. I guess we'll see when we get there, because the income tax here is going to be a little bit drawn out because of all those steps, actually. So I guess first things first, we'll take care of the Social Security, because what we're going to have to do to figure out his take-home pay is we're going to start with the gross salary. We got to subtract out Social Security, and then we got to subtract out the income tax. Social Security is easy. That's one step. So, oh, forgot to switch. Actually, that'll look okay if they're in different colors. So Social Security. So it's 6% of the gross salary, right? So that's going to be 0.06 times 60,000. So that's 3,600. All right, so that's one thing. Then the income tax, this part's going to be kind of epic this time. All right, so for income tax, all right, first of all, he makes $60,000. So the way that all these steps work is just like before, and now we have more of them. So yep, he makes up to 9,000, and he makes up to 20,000, so we got to use that second part. He makes up to 50,000, so we got to use that third part. And 60 is between 50 and 100. So basically, it's that last 10,000 to get from the 50,000 to the 60,000. That'll be taxed at 20%. But then that's it, right? You don't go above 60,000. That's how much he makes. So that last bullet point, so that very last step for the income above 100,000, we don't actually need that because he doesn't make that much, right? He only makes 60. So that last part doesn't apply in this case. So we don't really need it here. So that's nice. We're going to have enough steps anyway where we don't really need that last one. So the income tax will be, I guess, first 0% of the first 9,000. So that would be just 0 times 9,000. So that's 0. Then 10% of from 9,000 up to 20,000. So that difference is 11,000, right? It's like that next 11 after the first 9 to get up to 20, right? So 10% of 20,000 minus 9,000, which I can rewrite as 0.1 times 11,000, which is 1,100. Then 15% of the next 30,000 from 20 up to 50. So 50,000 minus 20,000 is 30,000. So it's 15% on that next 30,000. So we can write that as 0.15 times 30,000, which should be 4,500. Then 20% of And he only goes up to 60,000, so it's that last 10,000 to get from the 50 to the 60. So 20% of what we've got left, which is 60,000 minus 50,000. So to go from that last threshold of 50, from where there's a step in the progressive tax system, up to what he actually makes, which is 60. So that's going to be 0.20 times 10,000, which is 2,000. All right, so then we can just add these up to get the total tax. If you add those up, that's 7,600. So that is our total tax. Okay, and now that we've got those, then we can figure out his take-home pay. I need a little more room. There we go. All right, so the take-home pay. Let's see what we got. We'd start with the gross salary, and then we would just subtract out the other two things that we figured out. We'd subtract out Social Security, and we'd subtract out income tax. So then what we're going to end up with is going to be, so the gross salary was 60,000. Social Security was 3,600. And then income tax was 7,600. And if you simplify that, what you end up with is 48,800. That is his take-home pay. So for this one, the income tax was a little bit more work because it had more steps. But I mean, it's the same type of work, right? It's similar to what we were doing before, just more of it. So it does kind of stretch this one out a bit. And we had Social Security, which was a new wrinkle, right? We haven't had that before as its own separate thing. So that's another one where that's a deduction from the gross pay. So you'd have to subtract that out to figure out the take-home pay, right? You subtract that, you'd subtract the income tax, and there we go. All right, the last one is tough. And actually, there wasn't one of these in every single, because I ran this homework 3 times, and there were some variations in there. This showed up once, and there were other ones that related to being self-employed but weren't quite this long. So I think this would be the most extreme one that could show up, or something like this. So it says that Alexia is self-employed, gross income of $55,200. And when calculating her taxes, I should say Alexia rather than Alexis. I should be keeping this consistent here. One or the other. Can deduct up to $4,000 in expenses from her gross income before determining the tax she owes. The gross income minus the pre-tax deduction is a thing known as operating income, because then that is what the income tax is based on if you look down to the next paragraph. And then the other thing is if her expenses exceed $4,000, so like if there are surplus expenses, then those don't factor in until the end. So they're deducted after tax. So her total expenses were $7,300 for the year. So that means that's $3,300 above $4,000, right? So what we're going to do with this, it's going to be $3,300 deducted after tax. And a lot of times this is just referred to as the surplus expenses. And then the tax system is set up that she has to pay 17% on any operating income up to $30,000, and then 28% on any beyond $30,000. So then we want to figure out her net profit, the amount that she earns after all taxes and expenses. Okay, first things first, because the taxes are based on operating income we need to figure that out. That's not too bad though, right? Her expenses are above 4,000, so really we just have to subtract 4,000 to get the operating income, right? We're going to subtract off that max deduction. So for operating income, that's going to be equal to the gross income minus the pre-tax deduction, which is the 4,000, right? It's the her expenses exceed that, and that's as high as you can go, so that's what it's going to be here. So the gross income was 55,200, and then we're going to subtract 4,000. So that means that the operating income must be 51,200. Okay. Then we have to figure out the tax on the operating income. Right, now that we know what the operating income is, we can figure out the tax. So that would be the next thing. So the tax on the operating income. All right, so let's see, it's 17% up to 30,000 and then 28% over 30,000. So, all right, 17% up to 30,000 plus 28% over 30,000. All right. So then that'll be like her operating income's above 30,000. So we'll get this whole first part, right? The 0.17 times 30,000. And then plus 0.28 times what's left. But what's left is 51,200 minus 30,000, or 21,200, right? 30,000 plus 21,200 would give you the 51,200 back out. So, okay, what we're going to have then is, I guess I'll just rewrite this first part for now. So 0.17 times 30,000, and then plus 0.28 times 21,200. And if you do the multiplications here, this first one is 5,100. The second one is 5,936. So what we're going to get for the tax on the operating income is $11,000. Or, yeah, $11,036. That's what I wanted to say. Okay. Now for the net profit. I guess maybe a different color would be good here. There's a lot of writing. Okay. So this is the part that's tough. So the net profit, you would start with the gross income. But we had that pre-tax deduction, which was expenses, right? So the expenses you would subtract out, right? So minus the pre-tax expense deduction, and then minus the tax on the operating income. So I'm going to write that as tax on OE to try to fit this all in. So OE stands for operating income. And then at the end, remember, if we had surplus expenses beyond 4,000, those get subtracted after the tax has been applied. So then we have to do this. At the very end, you would subtract the surplus expenses. So that's what we're going to do. All right, so we could also say that the gross income minus the pre-tax deduction, that's the operating income, which we already figured out. So operating income minus the tax on the operating income and then minus the surplus expenses. All right, so the operating income is 51,200. Tax on the operating income we just figured out was 11,036. And the surplus expenses, if I scroll back up to where they are, 3,300, right? Because the total expenses were 7,300. We could subtract the 4,000 as a pre-tax deduction, but then the other 3,300 has to be subtracted out after tax. So this is where it comes in. So minus 3,300. And then if you do those subtractions, what you're going to end up with is 36,664. And that is the net profit. All right, so this one is kind of involved. There are other ones, I think, that are about being self-employed, but they don't ask for this. They ask for things like, what's the tax on the operating income? Where then you just get that, and you would stop, I guess, where the blue color stops, right? But this one, I figured since it showed up, if you can do the whole thing, then you could get the tax on the operating income, right? That's less work than this. So I figured this example kind of made more sense to do it all the way out, even though this one's pretty epic. And this video is already pretty epic. But I think in a general sense, that would cover all the variations that can show up. In this section, there's just a lot of variation in general, especially with the discounts at the beginning. Those can look a lot different from each other. And you know, like what one person gets versus what another person gets. It'll be the same concept, but the context changes so much that they might look kind of different. And even with the income tax ones, those can vary, but generally you get those questions where it's the flat tax versus the progressive tax. You get a lot of that. And like, yeah, the numbers can change and maybe you'll end up with a progressive tax that has multiple steps rather than just two. But you're probably going to get a lot of those flat tax versus progressive tax things. That's what I would expect out of the homework for 5B.